Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show today, as inflation continues to cool, will some prices stay stubbornly high? And some ideas about making housing more accessible to more people, plus a glimpse of the future as an Ontario company embeds AI into a communications tool. That's all ahead. First, for the week that was in business, it's time for the briefs. Some good news on U.S. inflation this week as a 4.9% gain in April represents the first sub-5% reading in 2 years. Closely watched sectors that are tied to tight labor markets also softened slightly, raising hopes that inflation is indeed on its way down and that central banks can take their foot off the rate hike pedal. Diplomatic tensions flared again between Canada and China this week as Canada expelled a Chinese diplomat accused of a plot to intimidate Conservative MP Michael Chong and his family. Shortly afterward, Canada's consul in Shanghai was invited to leave that country. Concerns that the spat could turn into a trade war are muted, with most analysts arguing both sides have too much to lose. Dozens of wildfires across Alberta forced people from their homes and shuttered businesses this week, including some oil and gas production that accounts for more than 3.5% of the country's total output. The province declared a state of emergency and is offering support to people who had to leave home for at least 7 days in total, at $1,500 per adult and $500 per child. Pilots for WestJet took to picket lines this week to highlight their negotiations ahead of a potential strike. The Pilots Association wants higher pay, while the airline argues that meeting their demand will undermine it financially. So far, the most undermined participant remains the beleaguered air traveler. The EU is moving to become the first major regulator to tackle AI with the passage of the AI Act. The law would split concerns about AI into 3 categories: those that are considered unacceptable, like government-run social scoring systems, those that are flagged as high risk and require additional regulation, and those that are left largely unregulated. The act will need to be adopted in each member country, but it is expected to set the tone for regulation globally. The Bank of Canada is continuing a years-long study of a digital currency with a period of public consultation. Basically, it wants to know what we think of the idea, though it has no immediate plans for it. The central bank digital currency, or CBDC, would not be a cryptocurrency, but simply replace physical dollars with an electronic version, something many people already do daily. And those are your business briefs. Canada's largest grocer took the unusual step last week of calling out some of its big suppliers, complaining that while smaller food manufacturers are beginning to drop their prices, the multinational food companies are not. As inflation continues to moderate, where will the resistance points be, and can anything be done about it? Michael Graydon is the CEO of the Food, Health and Consumer Products of Canada. Thanks for being with us, Michael.
My pleasure.
So this raised kind of an interesting issue. I mean, it's interesting that Loblaws wants to make this a public issue because it's got a PR battle of its own. But are we likely to see this where there is a big supply chain when it comes to things like food and other consumer products? And if parts of it stay sticky, they like the higher prices even as their own costs drop, perhaps. Is there anything that we can do about it?
Well, I think you'll start to see some moderation as the months progress. But, I think this was a little bit of camouflage on behalf of Loblaws in regards to trying to deflect attention to yet another very positive and significant performance for the organization. They're great retailers and their profits are showing it. The large manufacturers, to compete in the very challenging supply environment, are working more on longer-term contracts for ingredients. And in many cases, the ingredients that they're utilizing in their manufacturing today are contracts that were signed some time ago. And so though some of the commodities have started to drop in price on the current markets, the inventories that are being manufactured today are the old prices. So you're still seeing some of that pricing impact flow through to the retailers, but we are very hopeful that we'll start to see some declines in the not too distant future.
That's very interesting. So there's a kind of a long tail on when those were locked in. Do we have any sense of how much in advance? I mean, are we looking at prices from 6 months ago or 8 months ago or a year? Do we know kind of what their lead times are so we know when we should expect to see the current commodity price show up at the food stores?
Well, in many cases, it depends on the commodity itself. And, if you're buying potatoes, you probably bought the crop last year. Was going last harvest season, and you're utilizing that inventory through the winter months for production, and you will recontract again for this year. But remember too, there's so many variables. It's just not the commodity components that are driving inflation at the manufacturing level. Labor is going through the roof. Distribution costs, transportation costs are going through the roof. And so there are some significant challenges that still exist. And then you overlay it with what is a very aggressive regulatory environment from the federal government right now, adding more cost to the system. It's just not as simple as looking at the commodity markets at this particular juncture.
We've got about 40 seconds here, Michael, but do we think that prices will come down with the same kind of faithfulness that they rose? In other words, we did see retailers matching inflation on the way up. Will they bring them down as their costs do drop? Can we count on Loblaws to drop prices?
Well, that's up to Loblaws. The pricing is controlled by the retailers, not the manufacturers. But I think what we're trying to do very succinctly now is get margins back to the point where they were in manufacturing pre-COVID. While the retailers are enjoying solid margins and they talk to us about the stability within those margins, manufacturers want to do the same so that they can continue to invest capital and innovation and grow through their businesses. And quite frankly, there has been significant margin erosion over the last couple of years.
So good to have you, Michael. It's complicated stuff. We appreciate your time.
My pleasure. Thank you.
Michael Graydon, CEO of Food, Health and Consumer Products of Canada. Still ahead, as owning a home seems more out of reach for more people than ever, we'll take a look at some of the human-made reasons why.